Hello financial fans, welcome back to another stock analysis. Today we'll be covering Ulta Beauty Incorporated, stock ticker ULTA. Ulta Beauty is a chain of beauty stores that specializes in the retail of makeup, skincare, fragrance, hair care and other beauty products. The company was founded in 1990 and is headquartered in Bolingbrook, Illinois. Ulta Beauty offers a wide range of beauty products from more than 500 different brands, including both mass market and prestige beauty products. The company stores also offer salon services such as haircuts, styling, and coloring, as well as skin treatments and makeup application services. Ulta Beauty's mission is to make beauty accessible to everyone by offering a diverse range of products and services that meet the needs and preferences of every customer. The company is known for its customer-centric approach, personalized shopping experience, and emphasis on inclusivity and diversity. They're currently the largest cosmetic retailer in the USA, and they're sitting at a $27 billion market cap. And in 2022, they generated a revenue of $8.6 billion, and they operate around 1,360 stores. 43% of their revenue is generated through cosmetics, 20% from hair care, 17% from skincare, 14% from fragrances, 3% services, and 3% other various income streams. To determine the final valuation of the company, we'll be using a margin of safety. This margin of safety will be based on the financial ratios, financial health, and the growth of the company. I will be using a standard margin of safety of 20% that can never be below 0%. The margin of safety can either increase or decrease by the ratios that we're going to look at in just a moment. And the severity that the margin of safety will increase or decrease by will be determined by using a scale. When we're using 4 colors in a scale, bright red will mean a 5% increase, orange will mean no change, light green will mean a 5% deduction, and bright green will mean a 10% deduction from a margin of safety. When we're using 3 colors, bright red will mean a 5% increase, orange will mean no change, and light green, or bright green rather, will mean a 5% deduction. The first two metrics that we'll be looking at are the EBIT growth and the margin growth. The EBIT has gone up, going from $280 million in 2013 to almost $1.3 billion in 2022. The average growth in EBIT annually during this period was 43.9%, meaning a 10% deduction in our margin of safety. The margin has gone up a little bit, going from 12.6% in 2013 to almost 15% in 2022. The average margin growth is 0.2%, which does not qualify for a deduction in the margin of safety. The final two ratios that we'll be looking at are the debt to EBITDA and the return on invested capital. To get a debt to EBITDA ratio, we have to take the debt of the company, subtract the cash from it, and divide it by the EBITDA. Out of this, we get the amount of years of EBITDA it takes for the company to pay off all of their debts. For Ulta, this ratio is 91%, meaning a 5% deduction from a margin of safety. The return on invested capital for the company is sitting at 33.2%, meaning another 5% deduction from a margin of safety. Looking very good so far for Ulta Beauty. Let's go look at the valuation models next to determine the intrinsic value of Ulta. First valuation model that we'll be using is the discounted cash flow model. I've imported the free cash flow of Ulta going from 2013 to 2022. The average annual growth rate in free cash flow during this period was 55.5%, and I'm projecting expected growth rate in free cash flow of 15% annually over the next 10 years. With this percentage, we can determine the future free cash flow for Ulta and determine the terminal year of valuation using a perpetual growth rate of 3% and a discount rate of 9%. This leaves us with a sum of free cash flow of $33.1 billion, and to get our equity value, we have to add the cash and equivalents and subtract the debt, leaving us with an equity value of $31.7 billion. All that's left to do then is to divide it by the amount of shares outstanding, which leaves us with a discounted cash flow price per share of $624.03, which is a 17.4% upside from the current price. The second model that we'll be using is Graham's revised valuation formula. In this model, we'll be looking at the earnings per share that Ulta is generating, the growth rate estimate projected by Wall Street, and the current yield of AAA corporate bonds. And we go by the theory that the PE of a company with no growth is always 7. Taking all of these metrics in account, we get a fair value of $501.82, which is a 5.6% downside almost from the current price. The last model that we'll be using is the mean reversion theory. In this model, we go by the theory that a company will always trade above or below its mean, and the metric that we use to determine this is the PE ratio. The average PE ratio of the past 5 years has been 28.81, and the current PE ratio is sitting at 23.30. This means it's currently cheaper than it was on average over the past 5 years, so we get a higher fair value. This fair value is then $657.17, and that is a 23.63% upside out of this model. If you want access to all of my models, you can check my Patreon link down in the description. Anyways, getting that self-promotion out of the way, let's go look at the final valuation next. Looking at our final overview, we've imported discounted cash flow, we've imported Graham's valuation. We haven't used the multiple valuation since I couldn't find any close competitors in the industry. And we've imported the mean reversion theory. And this leaves us an average of $594.34 a share out of all of the models. Our margin of safety we've determined earlier using a standard margin of safety of 20%, deducting by 5% for the debt to EBITDA, 10% for the EBIT growth, and another 5% for the return on invested capital, leaving us with no margin of safety at all. And this way, the fair value stays the same out of the average. With the current price of $531.56, the upside is 11.81%, so in this case it would indicate a buy. But be aware, the company is trading almost at its all-time high currently, so just be careful with the stock and if you want to buy. If there's any other companies that you would like to see me cover in this channel, please let me know in the comments. And thanks for watching.